Looking at the Markets with David Modell.
Welcome, everybody, to Looking at the Markets with David Modell. I have a return guest and my most popular and requested guest ever in the 3.5 years that I've been serious about doing YouTube, Miss Lynette Zang from itmtrading.com. Welcome back, Miss Zang.
Well, I really appreciate it, David, and that's very flattering. So I'm glad. Thank you.
Yeah, I still, even though the last time we spoke was a year and a half ago, and I still get requests, when are you going to have Miss Lynette Zang back? So first, let me say that in case anybody's been living under a rock, Miss Lynette Zang is with itmtrading.com. That's 888-OWN-GOLD, 888-696-4653. If you're not getting your gold or silver there, you really should be. And we'll talk about what's going on in ITM trading. But first, I want to get your perspective on the craziness in the markets and why people really need to have at least some hard assets in their portfolio right now. I remember when gold was trading at $11.50 per ounce not that long ago. You put out, and people need to go to itmtrading.com for the blog and the videos, by the way, because you put out a video telling people to buy gold when everybody else was freaking out about hard assets. Since then, it went up to 1,500 plus. Where do we go from here? It's at 1460 something. I mean, is this just a consolidation for another leg up? What's going to happen?
Oh, absolutely. I know you and I are definitely in agreement, but the charts support that the bottom in gold on the spot market. And I think a big problem, frankly, David, is that we have been taught that if Wall Street tells us this is the value of something, well, then it must be the value of something, when that is really inaccurate. So when you ask me where gold is going, in terms of dollars or euros or yen or any of that fiat money, a lot higher. But the reason is because its most important function is to hold its value. So if you look at what the global central bankers are doing for themselves, they are accumulating gold at the highest levels that they've ever recorded, even as the price has been consolidating 1460 whatever. Yes, we technically we concluded a cup, but it's still dirt cheap. At 1900 it's dirt cheap. Yeah. At 8,000 it's dirt cheap. Because the way that the government and central banks use gold is to reset, revalue the fiat money. Dollars, euros, yen, and fiat, for those listeners that aren't aware, the translation is by decree. So it's government legalized money. And what do we know about governments? If they have the right to legalize it, they can also say, we saw this in India just a couple years ago, oops, no longer legal to use. And they demonetized something like 95% of all the currency that was out there in order to push their population into going cashless, because frankly, that gives them a lot more control. So you don't own physical gold outside of the system because it's going to go up in nominal terms. And anytime you hear me say nominal or notional, that means there's not a clear value. That's just a number representation. You own physical gold in your possession because it is outside of their system and because it performs the same most important function that it always has. It holds value. Now, why does it hold value, regardless of what happens with the spot market? It holds value because it actually has the broadest base of buyer of any asset out there. In other words, it's used in manufacturing, it's used in the financial system, it's used in medicine, it's used in food, it's used in art, it's used in jewelry. Globally, it has demand across every single sector and segment of the global economy. So maybe the price goes up, maybe it goes down. I mean, historically, before we went on the fiat system, it would go inside of a range. But there is always demand.
Yeah.
That's really so.
Yeah, absolutely.
I'm sorry. Go ahead.
I remember I reported about a year ago on HR 5404. This was a congressional bill. It is not law yet. That would actually put the United States back on the gold standard. Dollars or fiat would be redeemable for gold. Would this even be a good idea? And do you think this will actually happen someday?
Well, do I think it's a good idea? Yes, I do think it's a good idea. Do I think that it's going to happen? No, I don't really think it's going to happen. The reason why, and particularly at this point, it can't happen because what gold does for governments and central bankers, which is why they don't like it, is it forces them to have fiscal responsibility. Right. And it puts limitations on the debt that they can grow. And as we've seen, particularly since the financial crisis hit in 2008, what we've like tripled or quadrupled our debt levels.
Yeah.
So they wouldn't have been able to do that if we were on the gold standard, but that is exactly why it would be a very good idea. Having said that, when there is a reset of the financial system that has already begun, and we know this also because if you look at all of the traditional bank layoffs that have been going on, yep, and the rise of financial technology, right. Well, there is that shift that's happening right there. I'm actually going to be doing a piece on this probably next week specifically. But when the population has lost all confidence in the currency, then what is the historic norm and what the IMF, the International Monetary Fund, has talked about doing is they put a component of gold into the currency so that the population will trust the currency again and start to use it. Then the most likely outcome, and that's not at 100%, but then the next most likely outcome is that the powers that be will start to whittle that gold away. Yeah. But they'll actually, the most likely outcome is that the new currency that they come out with will presumably have a component of gold in it.
To me, the only reason that gold and silver are not much higher right now is because of the anomaly that's been going on for the past 2 years that the dollar has been unusually strong. That's not normal. I think it's only because other currencies are doing so poorly that the dollar it's not great by any means. It's just better. Okay. So how high would gold and silver be if the dollar didn't happen to have this unusual anomaly of strength? And once the dollar collapses, are we all going to get rich on gold, or what's going to happen?
Well, those that hold it, which is why the central bankers are buying it, are going to have massive opportunities. And while, what you're talking about is fiat money versus fiat money, so what? We're the healthiest or the least sick horse in the glue factory? Yeah. Everybody's still in the glue factory.
Yeah.
The real test of the value of a currency is in how much you can buy with it, your purchasing power. That's the inflation that the central bankers keep talking about. And they say that they can't reach that 2% inflation target. And they're shifting some things in there as well, getting us to run a lot hotter with inflation. But if you could take a minute and look at your personal experience, that's really how you value a currency for the individual, is how much can I buy with this? And I think a year ago, wasn't it that most Americans couldn't come up with $500 in an emergency? Yeah. And the more current numbers that I saw just recently, where they couldn't come up with $400 in an emergency. So I don't think it's getting better out there for the normal population. And I think that their cost of living has definitely gone up way more than that inflation level. Having said all of that, I also want you to take a look at the derivative contracts on gold. The Office of the Comptroller of the Currency publishes a quarterly report on derivatives held in FDIC insured banks. And when you look at the trajectory of those gold contracts, and then you put that with data that I saw before they change the accounting rules, because that's what they do. They don't change the behavior, they change the accounting rules.
Right.
But the data that I saw where from the Bank for International Settlements stating that for every 1 ounce of physical gold, there were 62,000 ounces of digital gold. They can do anything, really, they can do anything they want with the visible price.
Right.
Because none of that really makes sense for the level of buying that the central banks have been doing since 2008. Before that, they were net sellers. They were selling gold to suppress the price. But, now you just sell a simple contract. It costs you $150 to control 500 ounces of physical gold or 5,000 ounces of physical silver. You do the math. That's a lot of leverage, and it's pretty darn cheap when all you have to do is push a button. You have to go out and mine it or process it. And I think a lot of people just put too much confidence in these intangible instruments that are really designed by Wall Street, and a lot of their function is in perception management. In other words, getting you to believe what you see so that you move forward in a way that supports their goals. In other words, suppress gold. A rising gold price is an indication of a failing currency. So suppress the price of gold and get those intangible stocks that you perceive that you own, but you don't really. That's another story.
Right.
Let them go up. Then people don't want to buy gold. They want to buy stocks because that's what's going up. But all that while, the purchasing power value, what you can buy with those dollars, are going down. Yeah. And officially, we've been below and continuing to drop, mind you. But according to the Federal Reserve, we have way less than 4 cents in purchasing power value out of that original dollar. So, when it gets to zero, a trillion times zero is still zero. Look at Zimbabwe. Look at any of these. Look at Venezuela. Look at Argentina. Look at any of these countries that are now or have gone through hyperinflation.
Yeah, great point. If people want to take a starter position in gold or add to their position, first of all, they need to go to 1-888-OWN-GOLD, 888-696-4653, or just go to itmtrading.com. I'm looking at your gold selection right now. I love the gold eagles, the maple leafs, the buffaloes. What's a good way just to get started as a physical hard asset owner? What do you start with?
Well, for me personally, I like to start with a plan. I'm a strategist. And what really makes us different than anybody else is that, I've been studying currencies and currency life cycles since 1987. And I developed a plan for myself that addresses all of my personal needs. So property taxes, mortgages, whatever I want to do for my children, etc. And everybody here is a strategy specialist. I've trained them in this strategy. So I can't tell you what's right for you because it really is based upon your particular needs and your circumstances and your goals and really what you have to work with. but we are super keen on education. So, and we like, actually, we like the phone calls the most because we like human contact, which doesn't happen that often these days.
Yeah.
But we actually like to get to know our clients so that we can help them put a plan together and then execute that plan. I think everybody does definitely need gold and silver, both. I own both myself, and they need some that are just asset protection. In other words, one of the things that I want to be able to do is sustain my current standard of living.
Yeah.
And when you go through financial system resets, that we've already started the process. It just hasn't sped up fast enough for people to really see it yet. But I think it's becoming more and more obvious daily.
Yeah.
But, I want to make sure that I can sustain my current standard of living. And for that, silver is great. And then just fractional form, smaller pieces of gold and silver, a variety of sizes. So you can make sure you can always pay your property taxes, put gas in your car, buy food at the grocery store, all that kind of thing. And then you also need to be in a position to take advantage of the reset that's happening, which is why you see the central banks and the 1%ers loading up on real money gold.
Yeah.
Because what happens is all of those assets or instruments that are severely overvalued now, so the stock market, the real estate market, right? What will happen is that they will fall in value at the same time that the value the nominal value of gold is rising. When we see, it's called a cup formation, so it looks like the bottom of a cup, and I know you do a lot of technical things, but that's an accumulation pattern that lets you know that big money has identified a bargain and begun to very, very quietly accumulate. That's when you take some of your growth gold and you convert it into those assets. Just like we were talking about earlier with the gold stocks. Not every companies that are super loaded with debt are probably not going to be able to survive what's ahead of us because this is a debt bubble.
Yeah.
But there will be companies that can. They will just be a whole lot cheaper than they are today. So part of the strategy is capturing these gains when it's time to shift into the other income producing assets, which right now are overvalued, but will become undervalued in the future, presuming a repetition of history.
Yeah, it's interesting that you mentioned that the reset is already underway. Most people are not aware of it because they're not feeling it quite yet. But I'll tell you who is feeling it, the manufacturing index, the shippers.
Yes.
They are feeling it. And also, for those who actually believe that unemployment is 3.6%, first of all, I'm counted as not unemployed, but I'm a gig worker. Okay. So every day I have to look for new gigs. I have to look for new opportunities. So am I, or how about people who just stopped looking for employment because they're just frustrated they gave up? They're counted as not unemployed. So there are a lot of numbers being floated out there by the Fed, by the government, and this is not a political statement. This has happened over multiple administrations, regardless of who's in charge right now. So there are a lot of numbers I don't trust right now, and that's why one of the things that you've been privy to is farming or self-sufficiency, the self-sustaining movement. Why would you get involved in farming for yourself as more than just a hobby?
Oh, and it is definitely more than just a hobby for me. But what I know, having studied currency life cycles, is that food becomes the absolute biggest issue. And there are so many things that are happening right now. I wanted to make sure that I had a secure food source from not just myself, but initially anyway, for the rest of my family. Yeah. And I happen to have a fairly large family. I only have 2 children, but I have lots of sisters and brothers. So originally, I was actually in a little 2-bedroom condo. And because I did not think we would see this in my lifetime. But once the handwriting is in the wall, and we've been setting up for this since the last crisis. I mean, it wasn't like anything got solved. It just got papered over and hidden with money. So that's when I started learning. I wasn't even a gardener before I did this, but I bought a house with a half an acre of land, and I started farming. And now I obviously have people to help me because, there's only so many hours in the day, and I'm pretty much working all the time. But food is huge. You really want to be as self-sufficient, as independent as you possibly can be as we go through this reset. So even otherwise, I mean, don't we all need food, water, energy, security, community, shelter, barterability, and wealth preservation? Whether we're in crisis or not, don't we all need that?
Absolutely. Yep.
So that's really why I started it. And I have subsequently converted, like I only have this little patch of grass in the back for my big, huge dog, Daisy. Other than that, everything has been converted into creating food. So I can share a lot of food as we go through this. But I think we absolutely need to be as independent and self-sufficient as possible, including community. That's why you and I are sitting here talking today, right. Why you're doing your work, why I'm doing my work, and there are others out there that are doing the same work. This is our community, and we have to help each other.
100%. Absolutely. Now, how much of, I know it's different for everybody, but percentage-wise, what's a reasonable amount of one's portfolio to allocate towards hard assets? I mean, I'm not recommending anybody go 100% into anything. We definitely want to diversify, but I don't know, would a 40% gold and silver allocation be reasonable? I don't know. What's a good range?
Well, okay. I would really say that is really a very personal thing. For me personally, I mean, I've been a stockbroker, I've been a banker, I do all of this research, and I believe my research because I know how deeply I dig. And I think that one should always hold the most of their wealth in an undervalued or fairly valued asset that is in a long-term positive trend, and the least amount of your wealth in an overvalued asset or instrument that's in a long-term negative trend. So for me personally, all of my wealth goes into food, water, energy security, barterability, wealth preservation, and shelter. That's where I put most of my wealth. It's hard for me to say a percentage because I don't own any stock. I don't own any bonds. I don't, we've been taught about diversification, stocks, bonds, real estate, but all of those have been, real estate isn't exactly intangible, except that they've turned it into an intangible product through REITs and through other mechanisms that they've used. Yeah. I 100% know that all of those things are severely overvalued. Can they get more overvalued? Of course they can. The central banks are printing money for free, like it's going out of style. They don't have any choice because that's what's keeping all this stuff floating. But I wouldn't have one penny in there. So I can't tell anybody else to do what I'm not willing to do myself. Would I be 100% into gold or silver? Well, on that part of my portfolio, frankly, yeah, I am. I have the real estate, which is where I live, not for speculation. Right. This has not always been true, and I don't imagine that it's always going to be true. But there is not one little doubt in my mind about what's happening. Not even a fraction of a doubt. I don't care what it looks like. I know my research, and I don't go to, conspiracy sites. I go to the guys that are driving this bus. the International Monetary Fund, the Bank for International Settlements, the Federal Reserve, the European Central Bank, all of those places, the Bank of Canada. That's where I go to get most of my data. So if they're buying gold hand over fist, then why wouldn't you?
Yeah. No,
So
true.
I'm sorry. That is not a good question for me, because I don't think you should hold any of your wealth in intangibles. You may not have a choice, in which case then you use gold to protect that as an insurance policy. But no, when I know something, I'm all in.
And you've been right so far, for sure. Again, people need to check out the blog and the videos, as well as the free gold and precious metals guide on itmtrading.com. Why not download that right now? It doesn't cost you anything to learn about it and to speak to somebody over at ITM Trading, which is a wonderful experience. A couple more, if I may, if you have time.
Sure.
Yeah, I mean, again, I have a feeling that the title of this video is going to be "The Reset Has Already Begun," because
It's a good title because it's true.
Yeah. Again, if people are not feeling it, then it's hard to convince people of that at these asset levels, talking about the major stock market indexes. What can I tell non-believers that there really is reason to be concerned? Can I convince these people?
Well, I mean, I think that it's the normalcy bias. And basically what we're asking people to do is realize that what they've believed their entire lives is a big lie. But I think everybody would agree that those that understand money the most are the central bankers. And if you look at what they're doing for themselves, then, that should tell you, because they are scared. Yeah. Even if you look at, there's been a whole bunch of financial stability reports that have come out since the 15th of November, so over the last couple of weeks or so. And I haven't read one that said things are great. I've read a lot of caution in the central banks. Yeah. So you don't have to believe me. That's why in my work, for those that haven't seen it, I give you the links. You go ahead, you check out where I'm pulling a lot of my work from. I mean, if I gave you everything I was reading, it'd be a book in itself every time. But I give you the links. Don't take my word for it, but don't take their talking heads on TV word for it either, because their job is to get you to stay in the markets. But the central bankers are buying gold hand over fist. That's got to tell you something. So don't believe me, but maybe you might. Don't believe what they say on TV, but believe what they're doing for themselves. My daddy always used to say, and I there's a part of me that always kind of hates telling this story because it makes him sound less than, but for me, he was the most wonderful man in the world, and it was such a gift. But he always used to say to me, do what I say and not what I do, because he was a really bad driver. He would back into everything. So he'd say, do what I say and not what I do. And I would always say to him, Daddy, that just doesn't make sense to me. But it trained me not to just listen to what they say. Oh, yeah, everything is great. But look at what they're doing. They're buying gold hand over fist. I believe their actions. And when their actions do not support their words, I know they're lying. True. That's a simple one. And I hope everybody can really get that. Because by the time, people always want to know when. What's the exact moment that everything's going to collapse, because then you're going to suddenly be able to get everything in place? No, it doesn't work like that. I can't tell you when exactly the moment is that you're going to know about it. But what I can tell you is when you do know about it, when the system collapses, it's too late to do anything. And I hate to say this, but I feel like we're getting pretty close. Yeah. I'm seeing all of these kinds of behaviors that typically happen before a major crisis. I'm listening to what the central bankers are saying in their documentation, maybe not on TV, but in their documentation. And I'm watching negative rates. Come on. Do you really? People think that when somebody says, oh, this is free, there is no such thing as a free lunch. You're paying for it somewhere. been to the grocery store, been to the doctor, trying to get an education. Those costs haven't gone down.
True.
They've gone up, and they're going to go up a whole lot more. And now they're starting to get us prepared for that inflation by overshooting their 2% target. What that means is their intention is for you to lose 2% a year in your purchasing power because you don't notice it then and you don't complain about it. But they, according to their data, they haven't even been able to hit that target. That's because of the debt overhang, because too much money is now having to go, whether individuals, corporations, or governments even. Too much of that income is having to go to service the current debt. Well, if the whole system is based on people being able to continuously take out debt, and you can't service all of the debt that you already have, it's going to put a crimp on your spending. And therefore, if there's not as much money chasing a finite number of goods, the prices don't go up as quickly as obviously the central bankers want them to. Yeah. Did that make sense?
It does. I love the way you break things down and explain them, so it's so easy to understand. I mean, there's got to be a reason why the central banks of Russia, of China, of Turkey, of India are loading up on gold and dumping U.S. debt notes, which would include dollars and T-bills and T-notes.
Yeah, and Hungary and Poland and Romania and, and a lot of the central banks. Austria repatriated, Germany repatriated, a lot of the central banks in Europe where they have had, they have negative rates and it doesn't look like that's going away. They're loading up like crazy and bringing their gold home because if you don't hold it, you don't own it. It really is that simple.
Yeah.
So, yeah, this is a huge movement that nobody seems to see. But it's happening and it's documented and you can see it for yourself.
Yeah. And finally, does it matter as far as your portfolio is concerned? Does it matter who is president a year from now? Does it make any difference, really?
No. The whoever is in office at the moment, this has been a long time coming. And I think we're very close to that transition, but there is no stopping this train. It's already too far down the tracks and it's already going too quickly. So no, it's not going to matter who's elected next year or this year. No, next year.
Okay. Yeah. I mean, ultimately, I don't even think the president is really in control ultimately of where the train is going and how there's going to be a train wreck, which has been in progress
exactly.
for a long time.
The power to do that was handed over in 1971 when Nixon closed the gold window. What that really means is that he handed over full power and control of inflation to central banks. That's who's in control. Well, that's who's been in control. That's the problem. They're now losing control because all the tools that they gave themselves to manage inflation, interest rates, and debt levels. Well, look, our Fed tried to raise rates, and what did they discover? Not going to happen, which is exactly the same thing that every single central bank since 2008, there is not one central bank that have attempted to raise rates have been able to do so. Not one. Mm. And we are no exception. Here you go. So, what do you do when you're anchored at zero or near zero? We've got what, 1.5? The average level where central banks have attempted to stimulate the economy, in other words, inspire borrowing, they drop the rates 5.5 to 5.75%. Well, what happens if we drop the rates 5.5% now? That means we're in negative territory, which is most likely why the IMF came out with a paper. I did a piece on it not that long ago on how to go deeply negative and get rid of cash and get you to volunteer the cash. Because while the cash does not preserve your purchasing power, it does at least at this moment, protect your principal. Well, they can't have that. So they do need to take us cashless, but as they discovered when India did it, and it was such an aggressive move by the government that didn't work out so well. So they want you to volunteer, and they're genius. They know how to do this. They have it all planned out. Yeah. Breaking below the lower zero bound, which they came out with in 2015, they showed clean. I mean, it is just genius. It really is just genius how they can get you to volunteer the cash they can put this whole system in place, their words, not mine, within weeks in the next crisis, because they do it right at the central bank window. Easy peasy for them. It's invisible to you. You don't even realize it. And the entity that introduces that is the retailer. So you go into Starbucks, and if you want to use cash, it's going to cost you $6 for that cup of coffee. But if you pay in digital form, it'll cost you $5. What are you most likely to do? Yeah. I don't want to pay $6. I'll pay $5 here. But yeah, they know how to do this, and they will do it. They will do it.
If people
that's why having it outside the system is so important, and cash as well. You need cash outside the system too.
Absolutely. Wow. Okay, class has been in session, and I've taken notes and learned a lot. If people want to reach you and your team at ITM Trading, what should they do right now?
Well, give us a call, because we like human contact, 888-696-4653. But, I do a YouTube channel, at least 3 videos every single week, plus the interviews. So, I'm always trying to help people understand what's going on really, and not just what they want. So you can go to YouTube and just put in ITM Trading or my name, Lynette Zang, and it'll probably come up, or our website, itmtrading.com. But mostly we like human contact. I know that's unusual these days, but we do. We like to know our clients, and really, we all care. We all care.
Absolutely. I'll put a link in the description below this video, not only to ITM Trading, but also to the YouTube channel, so people can go there directly and check out all the archived videos, as well as subscribe to ITM Trading, so you can get I know that you guys put out new content constantly, so so people can stay in the loop.
Do.
That's fantastic. Miss Lynette Zang, we got to get you back here, hopefully not such a big gap next time. We want you soon, we want you often, so we can get more updates on what's going on in the markets. Thank you so much for coming on. Thank you, Miss Zang. I appreciate it today. Thank you.
Well, thank you so much for having me, David. It's been a pleasure, and I agree, it should not be this long the next time.